What is going on, everybody? Welcome back to yet another brand new video. In today's video, we'll be running down through the ICT silver bullet model. I'll be sharing with you guys all the key aspects of this model, such as where I place my stop loss, where my entry points are, and where my take profits are, and also how I manage my position when I'm in the trade itself. So without further ado, let's get right into the video. But before we get into the trade itself, I do want to mention to you guys all the previous sessions before our actual New York session. That is something that I do want to cover in this video. Before I even talk about that, make sure to set your watch or clock on the TradingView platform on the New York time zone, because that is the only time zone that I'll be referencing to. So having said that, we have two previous sessions before the New York AM session, and these are going to be Asia session and London session. Now the Asia session starts from 18 o'clock all the way to 2 a.m. and the London session starts from 2 a.m. all the way to 8:30. From 8:30 to 9:30, that is considered to be the New York pre-market open, and obviously from 9:30 a.m. that is considered to be the New York AM session all the way to 12 p.m. My apologies for interrupting the video here, guys. However, I am opening up a few spots for my one-on-one Crown Capital mentorship program, where I'm taking on a few series traders who are ready to change their lives forever. In this program, we'll be working directly together, helping you to reach that next level in your trading, whether that being getting your first ever funded account, getting your first ever payout, or even being consistent in the markets. Now, if you guys do want to be like David, who started with me a month and a half ago and he's already gotten 2 payouts and is on his way to getting his 3rd payout, be sure to apply. The link will be in the description down below for the application form. And if you guys do get accepted, we'll talk very shortly. Now let's get back into the video. So if you look very closely, on the left hand side we have Nasdaq, and on the right hand side we have S&P 500. So if you look to the left hand side, we have Asia session on Nasdaq. And as you can see, we do not have any Asia highs that are still intact or Asia lows that is still intact. What I mean by that is that London session came and we actually swept this Asia high right here. We swept, so we do not care about that. We swept, so we disregard that. Same thing that happened to the Asia lows. Before London session started, we had Asia lows, but then when London session started, we swept that, so we do not care and we disregard that as well. So coming into London session, we just simply mark out the lowest point of that session and the highest point of that session. And these two are considered to be London highs and London lows. Now, the same exact thing we do on NQ, we need to do on S&P 500. And as you can see, we still have the same London session lows and London session highs. Now, since we got our previous session high and lows marked out, we could move on to our next step, which is actually jumping into the New York AM session now. Something that I also do want to mention to you guys is that we need to be marking out our previous day high levels and our previous day low levels. These are massive draws on liquidity, and price tends to also have a quick reaction off of these levels as well. Now, the first thing that I always want to see before even looking for a trade is either a buy side or a sell side liquidity level getting swept. Usually I want to see a previous session high or low, as that tends to give us a more higher chance of the price actually reversing and going into our favor. So if we look very closely right here on the left hand side, NQ, we have London highs that got swept in New York pre-market at around about 8:40. Now also, when market opened, after a couple of minutes, we also do get a buy side liquidity level that is way back that got swept at around about 9:36. Now if you look to the right hand side here, we do also get a London high sweep, as we could see, at pre-market on S&P 500. Then after a little while, we also get a previous day high level getting swept. Now, number 2 on my checklist is going to be a swing low to be created. And the reason why I need a swing low to be created is because step number 3 and step number 4 are going to be correlated to that swing low being created. And as you can see right here, we do get this swing low that is created at 10:07. And now you might be wondering, why'd you pick this swing low specifically and not any other swing low that is being created after sweeping this buy side liquidity level? And the reason because is after this swing low, we do get a market structure shift and a displacement. Now, what is a market structure shift and a displacement? We see this swing low right here. A market structure shift is pretty much this candle right here, breaking and closing below this swing low. So as you can see, we break and close below this swing low right here with this candle right here at 10:10. That is considered to be a market structure shift. And the displacement is within that market structure shift. It's a strong push to the downwards where price is telling me that I am willing to seek lower prices. So as we can see, these two are paired together in this scenario right here. Now we're always going to be looking for correlating assets, and what that means is what happens on NQ must be happening on S&P 500. So as you can see on the right hand side here, we do get this swing low as well at 10.07, and we also get this market structure shift and displacement on S&P 500. Now it does not displace with this exact same candle at 10.10, but we do get this displacement right here with this candle at 10.11. As you can see right here, this candle right here closes below this swing low right here, considered to be a market structure shift and a displacement to the downside. As we can see, this strong push to the downside, that is considered to be a displacement. Now it's very important to have correlating assets, and what that means is whatever's happening on NQ must be happening on S&P 500. So let's say we got a swing low and a market structure shift and a displacement on NQ, but we did not get the same market structure shift and displacement on S&P 500. Therefore, price is not correlating and one of them is manipulating. Having said that, that is not a higher probability of a trade, so we set out on those trades. But having this example right in front of us where we have both of them showing us the same data and showing us the same price action, we know that there is no manipulation and that price is most likely going to head to the downside. The next step on our checklist is going to be step number 5, which is a fair value gap. Now a fair value gap has been formed right here at 10.10. A fair value gap is a 3 candle pattern. Let's name this candle number 1, this candle number 2, this candle number 3. Now a fair value gap is number 1 candle and number 3 candle are not overlapping, and there's an efficiency, there is a price gap. That is just considered to be a fair value gap. Now if we look onto the right hand side of us, we also do get a fair value gap on S&P 500. Now again, this is a good sign because both assets are correlating once more. Now the reason for a fair value gap is so important is because our retracement into that fair value gap is going to be our entry point to go short. So as soon as price retraces back and touches the edge of that fair value gap, we are going to execute the trade and go short. Now something that I do want to mention to you guys is that you don't want to be waiting too long before entering short. You don't want to wait for price to travel up into higher into that fair value gap, because sometimes price will not travel all the way to the top of the fair value gap and tap and go to the downside. Now you don't want to be missing out on A+ setups like these just because you want to have a higher fill price. So once we're in the trade, we're going to be placing our stop loss, and our stop loss is going to always go above the nearest swing high to the left of us. So in this scenario here, we do get this swing high to the left of us. That's where our stop loss is going to be. Now usually I don't want to be risking more than 30 handles per trade, so in this scenario we are pretty safe. Now for our take profit, we're going to be taking profits at the nearest swing low. The lowest hanging fruit is going to be our sell side liquidity level. So as you can see right here, we do get this swing low that is considered to be a minor sell side liquidity, and that's where we're going to be targeting right there. Now I also do want to mention to you guys, don't be too greedy and try to target something like this sell side liquidity level. Of course, this is a sell side liquidity level, but it is not the lowest hanging fruit. Our lowest hanging fruit is going to be this minor sell side liquidity level. Now, a lot of people will be targeting this, and price would definitely reverse on them, taking them out at stop loss or break even. So be sure to only target the lowest hanging fruit always, and these small wins do add up, guys. Okay, now as you can see right here, price does deliver ever so perfectly. Now, let me talk to you guys about how I would be managing my position whilst I was in this trade. So as we can see, price does rally up a little bit here, filling up this whole fair value gap, then drops right there. Now, if there was a swing low that was broken, as we can see, there is a swing low right here that is broken, but it's not a clean break. If this candle right here broke and closed below this swing low right here, I'll be taking my stop loss and actually reducing risk to the nearest swing high after that, which is going to be above this 10.15 swing high. But because we don't actually break and close below this swing low, I do not touch my stop loss. Then after a little while, we do generate another swing low at 10.22. Price comes down and breaks it pretty aggressively with this 10.28 candle. Then the next step I do is take down my stop loss to break even. Having seen this massive candle to the downside indicates to me that price is not going to be willing to seek high prices, and if it does, I don't want to be in this much profit and then taking a loss. So I'm putting my stops at break even, and as you can see, price does hit our take profit pretty clean. Now something that I do want to mention to you guys obviously is the macro time. Macro time starts from 9:45 all the way to 10:15. That is the first AM macro. And the second AM macro starts from 10:45 all the way to 11:15. Now it's very important and crucial to take our trades within those two 30-minute intervals and only to execute within them only. And the reason being is price usually tends to seek those key levels only in those 30-minute intervals. Now, obviously, sometimes price will see key levels outside, but that is a very, very rare occasion. So again, it's very, very important to execute and take the trades inside of these two 30-minute intervals, which I consider to be the first and second AM macro. As you can see right here with our example, obviously our retracement into that fair value gap was at 10:12 AM New York time, obviously, so that was considered to be in the first AM macro. And as you can see, price did deliver pretty perfectly. And there you have it, guys, the ICT silver bullet model right in front of you. If you guys do have any questions, let me know in the comments down below, and I'll be sure to get to them within the next 24 hours or less. Now, before you guys go anywhere, I do offer a VIP top trading floor Discord server where you guys could come in and take the same exact trades that I take every single time I do. Bangers like this for 63 handles or 64 handles. There's also heaps of different features in the Discord server where you guys could come in and chat with like-minded traders like yourself. There's a heaps of terminology, and my strategy is written down there as well. A lot of different support and help from me where you guys could come in and ask me questions, and I'll be sure to answer them within a 24-hour period. So if you guys are interested and willing to join the VIP Top Trading Floor Discord, the link will be in the description down below. Now, I also do offer a free Telegram channel where I post mini trade recaps whenever I take a trade, absolutely for free, just so you guys could get a extra clarification of the strategy and the model that I use. Now, if you guys are willing to join the VIP Top Trading Floor Discord server or the free Telegram channel, the link will be in the description down below. Thank you guys for watching, and I'll see you in the next one. Peace.